we've never had any system for being able to make correct judgments on the values of all businesses. We throw almost all decisions into the too hard pile, and we just sift for a few decisions we can make that are easy. And that's a comparative process. And if you're looking for an ability to correctly value all investments at all times, we can't help you.
No. We know how to step over 1-foot bars. We don't know how to jump over 7-foot bars. But we do know how to recognize occasionally what is a 1-foot bar. Yeah. And we know enough to stay away from the 7-foot bars, too.
When you're trying to determine something like intrinsic value and margin of safety and so on, there is no one easy method that could be simply mechanically applied by, say, a computer and make anybody who could punch the buttons rich. By definition, this is going to be a game which you play with multiple techniques and multiple models, and a lot of experience is very helpful. I don't think you can become a great investor very rapidly any more than you could become a great bone tumor pathologist very rapidly. It takes some experience, and that's why it's helpful to get a very early start.
But let's just say that we all decided we're going to buy or think about buying a farm. And we go up 30 miles north of here and we find out that a farm up there can produce 120 bushels of corn and it can produce 45 bushels of soybean per acre. And we know what fertilizer costs, and we know what the property taxes cost, and we know what we'll have to pay the farmer to actually do the work involved. And we'll get some number that we can make per acre using fairly conservative assumptions. And let's just assume that when you get through making those calculations, it turns out to be that you can make $70 an acre to the owner without working at it. Then the question is, how much do you pay for the $70? Do you assume that agriculture will get a little bit better over the years so that your yields will be a little higher? Do you assume that prices will work a little higher over time? They haven't done much of that, although recently it's been good with corn and soybeans. But over the years, agriculture prices have not done too much. So you would be conservative in your assumptions. And you might decide that for $70 an acre, you would want to, if you decided you wanted a 7% return, you'd pay $1,000 an acre. Now, if farmland is selling for $900, you're going to have a buy signal. And if it's selling for $1,200, you're going to look at something else. That's what we do in businesses. We are trying to figure out what those corporate farms that we're looking at are going to produce. And to do that, we have to understand their competitive position. We have to understand the dynamics of the business. We have to be able to look out in the future. And like I've said earlier, some businesses you can't look out very far at. But the mathematics of investment were set out by Aesop, 600 BC. And he said, a bird in the hand is worth two in the bush. Now, our question is, when do we get the two? How long do we wait? How sure are we that there are two in the bush? Could there be more? What's the right discount rate? And we measure one against the other that way. I mean, we are looking at a whole bunch of businesses. How many birds are they going to give us? When are they going to give them to us? And we try to decide which ones, basically which bushes we want to buy out in the future. It's all about evaluating future ability to distribute cash or to reinvest cash at high rates if it isn't distributed. Berkshire's never distributed any cash, but it's growing in its cash producing abilities, and we retain it because we think we can create more than $1 present value by retaining it. But it's the ability to distribute cash that gives Berkshire its value. And we try to increase that ability to distribute cash year by year by year, and then we try to keep it and invest it in a way so that a dollar bill is worth more than $1. You may have an insight into very few businesses. I mean, if we left here and walked by a McDonald's stand, and you decided, would you pay $1 million for that McDonald's stand, or $1.3 million, or $900,000? You'd think about how likely it was there would be more competition, whether McDonald's could change the franchise arrangement on you, whether people are going to keep eating hamburgers, all kinds of things. And you actually would say to yourself, this McDonald's stand will make X plus 5% maybe in a couple of years because over time prices will increase a little. And that's all investing is. But you have to know when you know what you're doing, and you have to know when you're getting outside of what I call your circle of competence and you don't have the faintest idea.
You stated that you're looking for someone younger to possibly work at Berkshire. And I was wondering if you could expand on that. And how would I apply for the job?
I think you just did. We're looking for one or more. I mean, I don't think it's at all impossible. We might even find as 3 or 4 that we would decide to have run some money and to take a closer look. We're not looking for someone to teach. I probably didn't make that clear enough in the annual report. We're not going to be mentors or teachers or anything of the sort. We're looking for somebody that we think knows how to do it. And there are people like that out there. We've heard from 600 or 700. I heard from one that had a 4-year-old son. I thought that was quite a compliment that they thought, I mean, I knew a caveman son. I thought that was quite a compliment that they thought, I mean, I knew a caveman could do my job, but a 4-year-old. But we're looking, and we have heard from a number of very intelligent people. We have heard from a number of people that have had good investment records in recent years, and in some case, sometime. The biggest problem we have is whether they would scale up, because it's a different job to run $100 billion than it is to run $100 million, and incidentally, and you can't do as well running $100 billion as $100 million in terms of returns. You can't come close to doing it. That doesn't bother us, but we do want to find somebody that we think can run large sums of money mildly better than the general performance in securities, and I emphasize mildly. There's no way in the world somebody's going to beat the S&P by 10 percentage points a year with $100 billion. It isn't going to happen. But we think maybe we can find somebody or some group, several of them, that can maybe be a couple percentage points better. But we really are interested in being sure that we have somebody that, under conditions that people haven't even seen yet, will not blow it. Anything times 0 is 0, and I don't care how many wonderful figures are in between. So we are looking for somebody that's wired in a way that they see risks that other people don't see, that haven't occurred, and they're plenty cognizant of the risks that have occurred. And those people are fairly rare. Charlie and I have seen a lot of very smart people go broke or end up with very mediocre records, where 99 out of the 100 things they did were intelligent, but the 100th did them in. So our job is to filter through these hundreds and hundreds of applications, find a couple of them that we think can do the job, who are much younger, perhaps give them a chunk, 2, 3, 5 billion, have them manage it for some time, have them manage it in the kind of securities that they would scale up to a larger portfolio, and then either one or more of them will get the job turned over to them at some point. Charlie?
Yeah, our situation in looking for this help reminds me of an apocryphal tale about Mozart. And a young man of 25 or so once asked to see Mozart, and he said, "I'm thinking of starting to write symphonies, and I'd like to get your advice." And Mozart said, "Well, you're too young to write symphonies." And the guy says, "But you were writing them when you were 10 years old." And Mozart says, "Yes," he says, "but I wasn't asking anybody else for advice how to do it." And so if you remind yourself of young Mozart, why, you're the man for us.
We will come up with probably a couple of people, and I've known people over the years. I've been in the job before. I mean, in 1969, I wound up my partnership, and I had a lot of people that trusted me, and I wasn't going to just mail the money back to them and say goodbye, because they would have been sort of adrift, most of them. And so I had the job of finding somebody to replace me. And there were three absolutely standout candidates. Any one of the three would have been a great choice. Charlie was one of them, Sandy Gottesman was one of them, and Bill Ruane was one of them. Charlie wasn't interested in having more partners. Sandy was interested in individual accounts and took on the accounts of some of my partners, and they were very, very happy, and they're still happy that he did it. And Bill Ruane set up a separate mutual fund called Sequoia Fund to take care of all of the partners, whether they had small amounts or not. And he did a sensational job. So I really identified three people in 1969 that were not only superior money managers, but that were also the kind that could never get you a terrible result, and that were terrific stewards of capital. Now, they were about my age at the time, so it was a universe that I was familiar with. And now I have the problem that the people I know that are anywhere close to my age, we don't want anyway. And besides, most of them are already rich. They don't care about having a job. But I have to look into an age cohort where I don't really know lots of people, but it can be done. And like I say, we did it successfully with three people in 1969, and it was done successfully in 1979 with Lou Simpson for Geico. And I never knew Lou Simpson before I met him down at the airport here. And I spent a few hours with him, and it was clear that he was a steward of capital. He was going to get an above average result, and there was no chance he was going to get a bad result. And he's been managing money for Geico now for 28 years roughly. So it's doable. It's a little more work than I like to do. I've been kind of spoiled, but I've got a job to do on it, and I'll do it.